that means we are live here on YouTube, 8/5/2019. It is Tackle Trading's halftime report, and the markets are down over a weekend where we actually were selling into the weekend as well, Matt. Not exactly a great looking chart if you are a bull in the market. Let's just start with the S&P 500. Matt, what's going on here?
A couple things. Number one, S&P was picking up volatility coming into last week. You saw a lot of slowing momentum within the overall bullish uptrend, as you can see here. Once it got underneath that 20-day moving average, we've talked about this, Tim. Once a retracement gets underneath that 20-day moving average in this type of technical environment, the bullish retracements just have not been very good. And I remember you called me up last Wednesday night, and we were talking about the market. And I made a statement. I said, it doesn't feel normal. It feels like last October. And I said, I'm not ready to make a call like I was on the Russell 2000 in October, but I'm getting really, really close. And then I remember talking to you on Friday as you were getting ready for the scouting report meeting. And, you're saying the same, where are we going to rank these things? I mean, we got volatility coming into the market here. We were bullish coming into last week. And, we made some radical changes to the scoreboard coming into the weekend just because what we were seeing in the charts was not it certainly wasn't bullish. It was picking up its momentum. And even on the intraday, and this is something that's been a little weird recently, like take this pullback here that you had that started the bearish downtrend. Every time it came down, it came back up. Every time it came down, it came back up. This really has a last October feel to it right here, Tim, when you got underneath that 20-day moving average, kissed off the 50-day moving average, and then you had a spark. And it's like, when you see these environments, it's like, yeah, can that be a buying opportunity? It certainly can, but you got to be very, very cautious in those volatile type of moments. And I made the statement to you on Friday. I said it feels like there's gasoline poured on this marketplace, and all it needs is a spark. And nobody knows what that spark is. But China says last night, hold my beer, I'll show you what the spark is. And they decided to devalue their currency, and that's what China has the ability to do in this trade war. We can put on tariff after tariff after tariff after tariff, and China, who's been around for thousands upon thousands upon thousands of years, they play the long game. They're like, do whatever you want. We own $3.7 trillion worth of your currency, and we can manipulate our currency, and this is what we're going to do. And what happened was they simply pegged their currency underneath the 7 handle, which has been a very, very important level for the dollar. And for those of you who are not familiar with this, China politically determines the value of their currency from a political perspective, and and they did that, and they did it very similar to what they did and if you'll remember, and this is where being a trader with some understanding of history can be very important, Tim. What this really reminds me of is not 2008 or October of last year. I want to get your take on it. What it really kind of reminds me of is right here on in the third week of August 2015, when China came out and lowered their value of their currency, given and in the same vein of thought, they also had a negative GDP, not a negative, but a decreased GDP number versus the expectation. And it created a lot of volatility to the downside. I mean, this right here, T, this doesn't look like it, but that's an 8% movement in one day in the marketplace.
Well, it wasn't just August back then, by the way. I remember January in that same period of time when it came out to the very first day in January, and they came out and did the same thing and repegged their currency. Boom, the market was down 10% in the first 5 minutes of the open, Matt.
Well, and we're only down 2.5% today, T. Okay, so we have had moments where this did spiral out of control a little bit for the bulls. Obviously, the bears are celebrating today. And by the way, this is why you have bearish trades in your portfolio.
Correct.
This is why. This is why you delta weight your portfolio. This is why you don't just think on the bull side. This is why you also think on the bear side. And the bear side has been doing really, really well the last 2 weeks.
Well, and as a trading community,
or week and a half,
trading coaches and mentors, we're here to help, give you guidance, give you insight, give you ideas. But here's something I want you to do a little reality check out there if you're watching our show. If you woke up this morning and you had to panic, you did something wrong last week, right? Coming into the weekend. If a move in the market, one day move in the market, puts you into a tizzy, you're probably oversized, Matt. And those concepts like beta weighting your delta and using the appropriate strategy for the appropriate account is so smart. And we have a bulls team and a bears team for a reason. I want you to give me a chart on USD/CNH, which is the dollar yuan spot. And I had to actually look up the CNH part of it because I don't ever look at this chart. You don't trade it. It's not a tradable currency pair.
You don't trade it.
But Matt, this is what is happening in the market. If people don't understand, the Chinese currency got devalued and the US dollar is running against it up above 7. So if out there, if you read it in the headlines that the dollar yuan cross pair went above 7 for the first time, that's the chart right
Well,
here.
and why does China do this? China does this in retaliation to what we've done with tariffs, and we put a lot of pressure on their economy, and China devalues their currency so other countries can buy their goods and services cheaper at that point. And this is another reason, and I'm dead serious here. If you've ever traded pegged currencies, you're making a big time mistake.
Mm-hmm.
You do not trade pegged currencies. I still remember January 15th of 2015 when the Swiss National Bank depegged from the euro, and it created massive volatility to the point where 3 Forex brokers went out of business because the margin calls were so expanded. Do not trade pegged currencies, but what you're seeing is the dollar increasing in value here versus the Chinese yuan decreasing in value, and that obviously put a lot of pressure on the entire market today.
Mark, I see that you have popped in here and joined us. Welcome out here to our halftime report. Mark, what's your read on this whole trade war stuff? Matt, back on the...
I think we need to, as Matt was referring to, I don't think we need to call it a trade war anymore. It's beyond that now. I mean, I think we can call it a
currency war. It's a currency war.
And I'm not being facetious. I'm not being sarcastic. I'm not trying to be glib. It's a currency war now. It has escalated. Yeah. It's no longer about, it is about two sides that are upping rhetoric, that are upping actions, and it is getting really, really nasty in the rhetoric. I mean, if you read in one Chinese state agency this weekend, they were using profanity to describe the United States. Imagine Anderson Cooper or Tom Brokaw or someone, talking about another country using profanity to describe them. And then imagine that was sanctioned by the state government.
Mm-hmm.
That tells you a lot right there. So
okay, but hasn't our rhetoric increased against China in the last year and a half too, though? I mean, it's you have political leaders in the U.S. doing the same thing against China. You have, certain media groups doing the same thing against China in the U.S. as well. So, and Mark, you're absolutely right. I mean, a trade war is one thing, but when you start talking currency war, guys, I mean, you're talking every country is going to try to devalue their currency. So
you're talking about the stability of the entire international financial system.
Mm-hmm.
I mean, you need to let that sink in for a second. Like the entire stability. What panicked the market today was not China saying, "Hey, we're not going to buy U.S. agriculture products anymore." That would send the market down. I mean, what has absolutely sent the market in a tailspin has been the yuan going above 7.0.
Mm-hmm.
It is just that simple.
Yeah.
Yeah. And Tim, let me speak to this really quickly. 11 years ago, when China went below 7 again, I can't remember the month, but it was back in 2008. It was in response to what we had done with ZERP and TARP and the subprime market crash. And that's what I believe was really kind of the beginning of the latest currency war. And in the next 7-8 years, you had about 570 interest rate decreases. And the Fed just announced just a couple of weeks ago to lower interest rates. China is now, stimulating their economy. Europe is now stimulating their economy. Japan is stimulating their economy. You're going to see interest rate decreases across the board, in my opinion, as these countries try to compete for who's the worst currency.
Yeah. No, I mean, and China is mad at the U.S. for a lot of reasons. I mean, they have political things going on right now in Hong Kong, and they blame the United States for those protests. So the anger towards the United States is probably the highest I can think of there was a period of time I wasn't following the news for about 10 years as I was playing poker, but as I've been actively following the news, this is the highest the anger has been. You're not getting a trade deal done anytime soon. You might see rhetoric.
No.
But this is nasty.
This is going to be years. This is going to be years, in my opinion. But I mean, making sure people are aware of what's going on out there is one thing. How to handle it is another thing. How are you guys adjusting your trading to a day like today, where we're down 2.5% across the board in the market, almost every sector down across the board in the market? Obviously, you weren't bullish coming into the weekend. I saw you guys in the scatter report meeting on Friday. I mean, we downgraded everything coming into the week, guys. Yeah. And I'll talk about this. I'll analyze the sectors here in a second. But I mean, the S&P got a 20-point decrease, down from 15 to 35. Basic materials down to 40. Energy down to -30. Communications downgraded to 35. Industrials downgraded to 45. Technology downgraded to 35. Discretionary downgraded to 45. Financial downgraded. Consumer staples downgraded. Real estate downgraded. Healthcare downgraded. The only sector that wasn't downgraded by the tackle community this weekend was the utility sector, which is basically just set at neutral right now. I mean, so obviously you guys were prepared coming into the weekend, made adjustments, but now that we've seen the new
and make
data,
no mistake, Matt, there were voices that wanted to downgrade even further.
Oh, I believe me, Tim was on the phone with me, Mark, and I'm like, we have to downgrade this big time. This is not, and this was before this candle. This is not normal behavior coming into that. And Mark, I heard you were very, very, very aggressive on wanting to downgrade it even further, mentioning on Friday in the scatter report meeting that you were very concerned about the Chinese trade war. What was it on Friday that you were seeing? Because that news didn't even come out till Sunday, Mark.
Well, because you got political players and you have an uncertain situation. All right. Whenever you have an uncertain situation in politics, and I'm not talking stocks here, this stuff transcends. The market is reflecting the geopolitical realities of it. Whenever you have an uncertain situation with two players positioning and you're in the early stages of it, you have no idea. And once again, I didn't anticipate, to be completely blunt, I didn't anticipate this magnitude of drop. But I didn't know what was going to happen, because you got two players who have their own political agenda, who will have their own playbook on how to handle this very unique situation. And it is really, really, really hard to gauge who these players who do not divulge their playbooks, who do not divulge their plans, what they're going to do next. And I think we're still there. I mean, we don't know. I mean, for all we know, Trump will come out and say something because he doesn't like the drop, and that will rally the market for a day. But we've seen this in the trade war before. And if we look back at the last trade war in May, where we had up days on randomness, we had down days on fear, it took the Fed stepping in. It took the Fed stepping in before the market stabilized.
Yeah.
Well, okay, let's talk about that, because coming into the Fed a week and a half ago, or last week, I can't remember, but coming into the Fed, guys, last Wednesday, we were expecting a quarter point drop, and then we were expecting most likely another quarter point drop throughout the back half of 16 or back half of 19 now. Does China and what they did yesterday to devalue the Chinese yuan and escalating this trade war, which, can we all agree this trade war is going to get worse from here?
Yeah.
The probabilities would indicate yes.
Yeah. And actually, that cut's looking a whole lot better now, because if we didn't cut at all and this happened, it'd be a little worse.
It would be, but it would be a little worse for the stock market, maybe not a little worse for the dollar. But in terms of that, guys, how does the Fed respond to that now?
They're going to
now that they got to cut. Don't they have to cut more aggressively?
I think so.
I mean, not only did we end the reduction of the balance sheet like we discussed last week, Tim, but we also saw the quarter point decrease. I think they're going to be a little bit more aggressive. In fact, you might be staring at quantitative easing 4 here, guys.
Well, hold on, Mark. Some of the rhetoric on the Fed speak from Jerome Powell on Wednesday was about how the trade war risks have de-escalated, right?
Yeah.
And that's one of the reasons why they were backing off of some of their stance.
What did I put my tinfoil hat and I shared internally. I actually shared it on a tweet that got deleted from Twitter because it was too conspiratorial. I'll go find the tweet.
Trading Justice got. Wait a second. Wait a second. Trading Justice got a tweet banned.
Yep.
That is awesome.
And you know what that said? I'll go find the tweet and I'll
share it on the screen.
And this is immediately after the tariffs. I'm like, listen, and I did @real Donald Trump. I'm like, The only logical reason for the timing of this is that Trump is trying to manipulate the Fed into lowering interest rates further. Because he heard what Powell said, he wants to essentially cause turmoil.
You got cut because of that?
What? And you know what? And I shared that
that's
internally. No, what, Tim? I shared that with you internally. And you know what? Who's on my side now? A few days later, Bank of America.
Yep.
Everybody, I mean, you know, what was a conspiratorial, oh, that's crazy thought when it first happened.
That's ridiculous.
Everyone's like, yeah, that's what's happening.
By the way,
that's obvious what's happening. And Twitter's like, no, that's too controversial. Oh, get out of here, Twitter.
Pulled off the profile.
I would like to know
that gives everybody reason number 168 to follow Mark on the Trading Justice
You don't need Bank of America and all these people that make about 4 billion times more money. Follow tradingjustice.com and you get the smartest analysis in the market.
I thought you were going to say that's reason 248 to hate Goldman Sachs.
I thought Mark was going to go put it. Oh, what was that is reason number 248. But what's his name? The guy with the tinfoil hat on, always screaming.
Me? Oh, come on, Tim. You do
his name?
Tim's got the voice.
You mean Alex Jones?
You're Alex Jones.
You got to give me an Alex
Maybe
Jones
on the
going.
podcast.
Hold on. No. Come on. Tim, just give me
good. You're really good.
TradingJustice.com. Trading Justice.
Come on, Tim.
Go on. I'll do it on the podcast. Let me do it. I got to get worked up into an Alex Jones.
All right, work on yourself because that would make me happy on this.
Well, that's what.
Are you happy about
that's what Mark just reminded me of.
Well, you know, here I was having my perfectly zen morning, short in the market, just having a good morning, nothing drama here. Then I come into this.
Welcome out to our show.
I got a question for you guys. I want you got yes or no? Do we spiral from here? Because you have the ability to spiral from here.
I was talking about that just a few minutes ago. My instinct is no, you don't, because most of the time you don't. But it definitely feels in the probability of
look at the intraday chart here.
Yeah, we just broke down.
Lower low, lower high, lower low, lower high, and you just broke 2850. You're picking up the volume on the breakdown. You're approaching 2850. You can clip 2850 as well. Dropping this down into a 30-minute chart. There's no support. Dropping it down into an hour chart. There's no support. Dropping it down into a 4-hour chart. Maybe I can beg to go find a support level somewhere. Yeah. 2,800, guys. 2,800 is the next support level.
Well, and that's what I would define as a spiral. Do you close another 2% down at 4?
Well, yeah, I don't think the market's going down 10% today.
Right.
It's not. Does the market have the ability to break 2850? And if it breaks 2850, there's nothing real strong until you get down to 2800. And when you talk about those big days where you saw some escalation, you were talking in that 4 to 5% range.
Yeah. Mark, what about you, Noah? What do you think?
Yes, I think it has the potential. And so because of that, I start working my portfolio. But I've just been legging into spreads all morning. Just buy, and then as soon as I see an uptick, I sell another option. So I'm just legging into risk-free spreads. But I keep buying new ones just because I think the market does have the potential to keep dropping. And so I'm trying to consistently hedge out the portfolio and make sure I've got the bears on, because I think that this could be something big. And I don't want to speak with hyperbole and a lot of conjecture here. Just having seen the market go into tailspins, I think it's always a possibility. I don't know that this is it, but it certainly has the market spooked today. And I could just see a tweet coming out about a trade deal being done, something like that.
Okay,
but
let me ask the question another way so that we all don't sit on the fence. Would you buy here?
No.
Wait, what are you talking about? Be specific, because I'm buying puts here.
No. Would you go long the S&P 500 here?
No.
In any capacity?
No.
Okay. So basically, I think every trader's looking at the same thing we are right now, guys. They're looking at this and they're saying, okay, we got a nice little bearish downtrend. Look at it picking up momentum as it broke 2860. Mm-hmm. Look at the massive volume we've seen over the course of this pullback. Look at the volume that you see on the daily chart here over the course of the last few days. And then I'm sure there's people out there saying, buy the dip, buy the dip, buy the dip, buy the dip. You don't buy it. You don't catch a falling knife here, ladies and gentlemen. You let it slow down. You let it double bottom, double top, and then you buy the breakout off a W reversal pattern. but there is nothing in this chart I'm seeing with any type of reversal type situations right now.
No, I mean, the only thing that you could even hang your hat on at all is that you're range down and all that kind of stuff. You're more than an ATR range down. But if you've traded for any amount of time, you know that on a day like today, that really that logic about volatility ranges and bounce backs and snapbacks and counter, nothing's there, right?
Yeah.
I mean, could somebody convince me of a day trade in something specific? Yeah, maybe. But I don't know if you would.
Not on the S&P.
Not on the broad markets. No, not for me.
But my point is twofold. Number one, it has the ability to spin. Okay.
Correct.
And we should be adding bearish trades to offset bullish delta.
Yep.
That's why we rank the sectors on a weekly basis. That's why we rank the market on a weekly basis, so that our community can ensure that they are weighting their portfolio to what the bias is in the marketplace.
Yeah.
And when you see massive downgrades like that, you got to attack that bear side of the equation to offset those bullish trades, because even with this little sell-off, Tim, most people are still net bullish in their portfolio. But it's on days like this where it's like everybody gets caught upside down. But then you got to look at entering some of those bearish triggers, number one, to offset those bullish trades.
Yeah.
But also, Tim, I was looking at the scouting reports today. Coca-Cola here. Coca-Cola is still holding its nice little support level at 52. You have RSG here trying to hold its bullish retracement. You have Bro gap down, trying to hold the 20-day moving average. So you're still going to have some bullish opportunities with those bullish retracements in the marketplace, especially if the marketplace does slow down. You're going to have to obviously update your triggers to make sure you're not getting caught upside down, and definitely wait for confirmation on the bull side. So that's what I would say. Keep an eye on those bullish retracements, number one. Update those triggers, number two. Make sure you get confirmation, number three, and then add some bearish trades to offset the bullish delta.
And to go back to your original question, what did you do this morning when you were reacting to the market? I didn't do anything different than any other day, Matt. I went through my accounts. I adjusted my delta. I managed all of my positions one at a time through my daily routine. I'm now looking for new delta. I'm doing my day trading the way I do. You shouldn't change your approach.
Can I also say one thing here?
Mm-hmm.
If you know how to trade futures, you could have hedged last night too.
Correct. Yeah.
I mean, we saw last night at 7 p.m. that the Chinese news came out, and it was all over everything. It was all over. It was on CNN, for crying out loud, but it was all over. Zero Hedge was all over it yesterday on Twitter. And so it was pretty obvious what was happening in the futures market last night. If you understand how to trade futures, and this is one of the reasons why you should learn how to trade futures, this is the futures market open right here. Nothing to see, nothing to see, nothing to see. Here's China right here. Okay, China comes out, news happens, violates support. You could have hedged right there. So futures are a very important hedging vehicle, and because they're 24 hours, it allows you to attack the market whenever we see things in the market.
What if Trump can pull this off? What if he can cause such a market decline that he gets the Fed to cut a full base, like a full point, not a quarter, not a half, not three, a full point, and then he makes nice with China, gets the market rallying, going back to all-time highs heading into the election?
China's not going to be nice.
You're saying what if?
Yeah, I mean, what if he can pull it off?
Yeah, I think if the Fed were to cut a full point that quickly, it would actually.
I don't know. Do you guys really think Trump's thinking that far ahead, or is he just thinking one day ahead?
I read The Art of the Deal when I was in high school.
He didn't write The Art of the Deal.
I know, but I read it, so I get credit.
Okay, but again, he didn't write it.
Now, I'm not necessarily happy with him, if I'm right, because he's, in order to get reelected, throwing the whole stability of the world economy at risk for all personal power.
Trump's a counterpuncher, though. I see Trump as a counterpuncher here.
I think he was counterpunching the Fed, not China. China's just the tool. He's counterpunching the Fed.
Okay, so
the Fed didn't do what he wanted.
Let me think about it. So, can Trump successfully pull off the hat trick here?
Well, and here's and this
get
is what
the
I'm
Fed to lower rates. Get the Fed to lower rates, right? Number one, get them to cut to zero, basically. Okay, that would spark bearish activity, in my opinion. If the Fed started aggressively lowering rates, I mean, it's like, watch out, the end of the world's happening. But then, can he successfully pull off a trade deal next year coming into the election cycle?
All he has to do is capitulate.
Yeah, well, I know, but I don't know if Trump's playing chess, Justin. I think he's playing more checkers, but that's my opinion.
I think he's if it plays out like that, there's an excellent buying opportunity somewhere down the road.
Yeah, I don't know. The one thing I don't see, and Tim said this in the pre-production show, he said, the U.S. thinks in terms of short term. China thinks in centuries. I don't know if Xi Jinping cares that his market's down 20%. I don't think he cares. I think Trump would care tremendously if our market's down 20% because he would get the blame for that.
Even if China doesn't cave, Trump has to cave at some point before the election.
Of course he has to cave. Everybody in the world knows he has to cave, including President Xi Jinping of China, which means they don't have to cave.
Whatever happened to capitalism here? First of all, I don't want to get pulled into a big political thing about Trump. We got too many charts to look at, but I will say
hold
this.
on, wait a second.
I will say this.
Bullshit. But nonsense.
Your charts don't matter. On
no
the
way.
macros.
If he would never bring up
Tim.
this trade war rhetoric,
okay,
in the
so
first
we can't
place,
talk.
the S&P would be at 3,500.
That's not
right?
true.
Yeah.
Okay,
Well, that's not
true.
You
That's not
talk
a
about
true
the market
statement.
and the economy without bringing up politics every once in a while.
Yeah,
because they're all so
Especially when it's the only thing moving the
My
market.
God, it's the number one factor in the market, and I get the logic here, Tim, because when we talk Trump, people have a tendency to turn off. But I'm sorry, if people get turned off because we're talking economics and political philosophy in a massive trade war, which is the number one reason the market is moving, then they don't need to listen.
No, that's not what I'm worried about right now. Honestly, it really comes down to we don't know what Trump's going to do next. It's the wild card in there. My firm belief is he's not actually helping the economy here by fighting with China. Obviously, it's not. And I do believe the S&P would be much higher if he did not open his mouth on Twitter. He's not helping economic negotiations here. We have a market situation right now that should run and rally. 2 weeks ago when the market was hitting new highs.
I disagree.
Yeah.
I just do. I just disagree. Why are we making the assumption that without the Chinese trade war, the market's going to run higher? We haven't seen that in S&P 500 earnings.
Well, but a lot of the S&P 500 earnings that have missed have been dependent on the international economy, and a lot of that's been drugged down. Companies like Caterpillar, Deere, all that kind of stuff.
I don't agree with that. I don't agree with that. The Fed was starting to raise interest rates in 16, coming into 17. They stalled on it. They do it because asset prices are too high right now. I just don't believe that. That's a perma bull argument. That's just something I just don't agree with.
But I think it does come down to the real kind of crux of it. Where are we economically? Because the old playbook about cycles, right, up and down, and the way cycles normally work, we're not anywhere in some traditional cycle because we're at the all-time high. We're cutting rates. We're in a currency war.
How? Wait,
we ain't at the all-time high anymore.
Hold on. How is this not the same playbook we've seen played out? I've been talking about this for a year now on this show. If the Fed starts raising rates, that's not a sign of buy action, Tim. How many times have I said that? The Fed was raising rates because you're at the top of the market and price appreciation was getting too high. And then the Fed starts cutting rates, not as an indication to start the buying action. The Fed starts cutting rates because of what they see in slowing growth around the world. And then China throws a monkey wrench into it. So I just don't agree with the logic that says the market's just always going to go up if something international doesn't happen. There's always something international. There's always something geopolitically. We're always thinking about something happening in the marketplace. And I just don't buy the argument that the S&P is going to be at 3,500 without the trade war. I don't see that in there. There's not any economic data around the entire world that supports that argument, in my opinion, outside of Fed quantitative easing.
Well, you could map out what the S&P 500 companies that were affected by international trade, how much they lost in EPS, and you could project it. That's all fundamental kind of projections, right?
Adam, hold on. I need to respond to Adam. Adam, the market started dropping before that in October because of slowing growth we saw in earnings reports.
And around the globe.
Yeah.
Well,
you had recession data coming in October. I remember I was in this halftime report talking about it. You had recessionary data coming out of France, Germany, all of Italy, Japan, China. Yeah. So all of a sudden the market's going to slow down, go to zero negative GDP, and we're still talking bullish markets.
Yeah. 2850 on the S&P. As we've been talking here, it dropped another 10, 12, 15 points. We're in a downtrend. We're underneath moving averages on the intraday. Matt, go back to the daily chart. Let's run through all the indexes, and just see if there's anything obviously different between them. The NASDAQ obviously is selling a little bit more here today on a percentage basis. Give me a look at the Dow, the NASDAQ, the Russell, and the S&E.
They're all looking fairly similar right now, picking up momentum to the downside, stalling a little bit on those 5-minute charts. Let me break that into a 15-minute chart here. You're seeing momentum pick up to the downside on the NASDAQ, S&P. They're all trading in line with one another right now, Tim. Obviously the NASDAQ, which is very sensitive to China, the Intels, the Oracles, the Broadcoms of the world. Those things are down 4-5% at this point, Apple and whatnot. So a lot of these heavy tech stocks that have a lot of impact over there in Hong Kong and China as a whole, you're starting to see a little bit of a pickup, down 3.63%. The Russell 2000 here down 3.20%, just broke a support level on the intraday 15-minute chart. You would have to have that projection going down further from today. And then on the Dow Jones down 2.8% right now, just broke support there at 25,800. And you're a little bit overextended on the Dow Jones, but everything is pointing to further downside risk here.
Obviously they're all under pressure. They're all down very notably, but the NASDAQ down the most. And a lot of that is those tech names had such a good run there for a while. And here we are just getting beat up. A lot of the tech names I want to look at. Why don't we run through some of the big ones? Apple Computer, we got to start with, down 5%. They had a gap out on earnings just a week ago, Monday. Okay, you gap out on earnings, you backfill, you lose the candle, you lose the trend, you lose the moving averages, and now you're gapping down. Wow.
That chart looks like Bitcoin and Beyond Meat and Tilray, and we're talking about an Apple. I mean,
almost identical to what it did back in April, though, by the way, Matt. Look at it.
It's insane. Well, that's not, gap out, I get that, but Tim, that is massive volatility to the downside.
Yeah.
That's the only way to describe that chart.
Yeah, that's falling knife right there.
Anyone that's ever listened to me on Trader Lounge or everything else knows part of my trade war playbook is to go bearish, or at a minimum get the hell out of companies like Micron and Apple and companies with heavy exposure or some exposure to China. It is like imperative number one. Listen, if you are not a Tackle Trading Pro member, like these kind of little tips you pick up along the way, along with all of the insane education that Noah, Tim, and Matt have put together with their formal presentations, is worth the price of admission. Trade war playbook. When things escalate with China, get out of Micron, get out of Boeing, get out of Caterpillar.
Didn't you veto Micron for that reason from the scouting report meeting? You vetoed Micron?
I did veto Micron for that exact same reason. Even though the technical setup was nice, it violated something I've seen time and time again.
Oh, that's Mark's standard violation, though. Underneath the 20, above the 50, it's a no-go for Mark on that. That research on Mark's on his back testing when stocks retracing this market underneath the 20, above the 50, but violate it. It's great back testing. I wouldn't touch it.
Yeah, I agree with that. I'm looking at all these other FANG stocks, Matt. Google, I loved Google's pullback. I like the earnings. They had such a good response, but then boom, trade war negotiations, international company, one of the biggest in the world. That's ugly.
Well, it is, and I saw it on the options report this week, and obviously needed a doji and confirmation and all that jazz. Didn't get it, but yeah, just down underneath the 20-day moving average. You talked about the FANG stocks, Facebook underneath the 50-day moving average. It does have support at 180. Keep an eye on Facebook at 180. If 180 breaks, you got 167 by 170 where the 200-day moving average is. Keep an eye on that. Amazon here, another big dog sitting right there on that 200-day moving average. Amazon's an interesting little beast here today. Gap down, comes down close to that 200-day moving average. Keep an eye on how Amazon's going to behave around that 200-day moving average. It really didn't care about it much here and didn't care about it much there. But the 200-day moving average certainly can play a role, not in a volatile condition, though, but just keep an eye on how it responds around that 200-day moving average. Microsoft here, amazing stock, gaps down, breaks the 50-day moving average. Next support level on Microsoft right about 130. If it breaks 130, if Microsoft breaks 130, the S&P is down another 5%.
Yeah, most likely. And you can see in May when we started a lot of this rhetoric, it did have all those violations as well. If the market does come back and start showing you strength, you'll get it in the candlesticks. You don't have to guess where the bottom is on these red candles, no doubt about it. Let's run through all the commodities. Start with gold here, Matt. It might be the most bullish instrument that you can just stick some money behind. It's been holding those MAs now for a couple of months, even in that high base triangle, the pullback into the MAs, and then another break and run, and then hear the news.
If
Obviously
only somebody gave you some
gold.
warning over the last 8 months, you know.
If
Noah,
you listen to
Keno,
anything
Matt, Tim,
Tackle has talked
everyone,
about, it's buy
like,
gold, right?
Like if this is your first halftime report ever, then we have talked about gold and adding it and protect it for 8 straight months now. Like, we've been so bullish on gold for 8 straight months.
I remember writing the commodity report back in October, going out, this is the time to buy gold.
So, I mean, and it's just, and everything's the same. So, like, once again, when you look at the fundamentals of gold, they're only even better. Like, if you get in a currency war, you could see gold hit heights that you haven't seen.
You could see 2000.
I mean, the fundamentals that we've talked about gold for 8 months, that's your old grandma's stuff. I mean, you got some real pour gas on the fire type stuff going on right now with the currency war and gold, you know, along with the instability. I mean, it's insane.
Yeah, gold broke out, bullish, no doubt about that. Breaking out today, kind of held its channel on Friday, but broke that 1450 barrier. Obviously, 1500 would be the next type of cycle up. If you're looking at this from a long-term perspective, gold's just doing really good. And you got to like that breakout. I'd say anything above 1450 on gold is a buy type opportunity. Silver, you know, not the safe haven status that gold is, not the inflationary protection that gold is. So it's not going to respond to these types of environments the same way gold will. And some people might not understand that because they're like, well, silver's an inflationary asset. It's a precious metal. No, silver was $15 in 1982 and it's $16 today. That's not an inflationary asset, and it's not a protectionary asset either. Silver is part of that GS ratio. So when you're looking at this, when you're asking yourself, well, why isn't silver up but gold's doing really well? It's because silver is not a safe haven and it is not an inflationary asset. What it is just perpendicular stalling with another leg up, in my opinion, as we break out of that 1665 level. So keep an eye on 1665 by 1668. Obviously going to be volatile, but I want to touch it into this volatility. Wait till it breaks out of the ranges on silver, and that could be coming up fairly soon. So keep an eye on those levels on silver. Looking at crude oil here. I don't know how to read crude. You guys help me read crude here. It's crazy.
I'm leaning on the left side of the 50-yard line, but just barely. I'm neutral, subtly thinking it could go down because of the overall pressure and economic risk of global economics right now and what's going on. The only thing keeping me neutral, by the way, and I would be more bearish, and I think the only thing keeping crude oil neutral is all the risk politically from the conflict risk out of Iran.
I mean, plus on your supply side, like right now there's terrible fear on the demand side. But your most recent EIA report was really bullish. Saudi Arabia and the OPEC countries produced the lowest amount of oil in the longest time on their most recent report. So you got a few things holding up oil, but boy, it's really sensitive to the trade war. It is really sensitive to the trade war.
It's a hard tradable instrument either on the buy side or the sell side. Triggers are so hard on this recently. For me, it's just from a directional trading perspective, this is still a complete stay away for me personally. Still cash flow vehicle though.
Yeah, for sure. And we're going to run through all the sectors here in just a minute. And by the way, if you're watching our show, thanks for being here. Always appreciate it. It's great to have such a great audience out there. And give us a quick like and a share and put something in the chat here. Team Tackle, let's go tackle trading, something like that. Get our hashtag out there and make sure that you're getting the word out. Natural gas has been bearish now for a bit, Matt. We've been bearish on this throughout the consistency of the year. Still down.
I was going to make a joke. Is it going to be the first commodity to go to zero?
Dude.
I'm obviously joking there, but you did just break support again at 210. kind of kissing that 202 level. A break of $2. I mean, how far do we got to go back to?
No, I've
get
had
a
a lot
break
of
of
people
2?
ask me recently on UNG, on natural gas, where the bottom is, this and that. I'm like, listen, the technical weakness is too strong. I'm all about acquiring some natural gas as part of a boomerang trade, but you got to see some stability pattern first, and that has not even sniffed it. Sniffed it recently.
When you're looking at on the weekly chart here, okay, let me see if I can get you some convincing here. You do have a ton of evidence for 19 years now that $2 is a very, very important level of support. Okay. Now, the very low point in the last 20 years, $1.60. So it certainly can't get down to $1.60. You also have some evidence right there at about $1.90, I would say. So a break of 2, you're looking at 190. But I'm looking at it at this point saying, how low can it go? Maybe I should start acquiring some for, like you said, Mark, maybe a boomerang on UNG, and maybe to roll it into covered calls, because it certainly still go down another 10, 15, 20%. But man, how much further?
It's a reasonable question.
Yeah, I mean, there is opportunity here. It's just, you want to be greedy. You want to wait for some stabilization. It's just wait. It's just
I'm personally going to wait for a double bottom somewhere around 2.
Yeah, I mean, you got to wait some stabilization pattern.
Yeah.
It's just
no. When you try to scrape things off the bottom, I mean, do you have a favorite pattern?
Yeah, breakout retracement. I want to know it's going back up, but then
W breakout retracement confirmation. Okay.
A falling wedge. I also like to see a falling wedge, or obviously double, triple bottoms, what have you. But I like that breakout retracement. It's my favorite bullish reversal signal, because that's when you actually have an idea it's reversing. Otherwise, I feel like I'm guessing sometimes.
Yeah, you don't want to pick it up as it's falling. Let it double bottom.
Don't try to catch the falling knife. I get it, though. I do think it's on everybody's watch list and targeting where that bottom will be at, because we've been trading for long enough to know UNG is a great cash flow instrument for like retirement accounts. Commodity-based stuff that we use in the personal
especially if you can
gold.
pick it up cheap.
Boomerang.
Yep,
if
cheap.
you can pick it up cheap. Bitcoin, by the way, is looking good as well. I have no idea where the logic of this came out, but I heard that somewhere they were talking about how it was a safe haven, Matt. I don't agree with that, and I love Bitcoin. So
you're a holder, okay? And I was teaching for Legacy in New York City this past weekend, and wonderful environment to teach in. And on Friday, I was just having a kind of a lax conversation with the class, and somebody asked, we were talking about market cycles and interest rates and blah 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 blah, right? In terms of Bitcoin, somebody asked me, well, is Bitcoin a safe haven? Right? And I said, I certainly don't believe it is at this point. It's still so new to be a safe haven, right? In a lot of safe havens like gold or utilities or whatnot, it just doesn't share the same qualities as those types of safe havens. And, gold's been a safe haven since the Chinese yuan first printed the first currency 1,300 years ago. So we have centuries upon centuries of evidence of gold being a safe haven. When you look at Bitcoin, what I said, although I don't believe it's a safe haven, and I don't believe it can be a safe haven given that it's so new to the market, and safe havens don't move 13, 14, 15% in a day. They certainly don't go down 30% in a day. It does share some characteristics of a safe haven. And what I meant by that was, in times of real market volatility, we've seen Bitcoin go up in those moments. Now, can it be sustained? I don't know, but we have seen in the very shortest time frames Bitcoin acting as a safe haven. But to say it's a safe haven in the same capacity of, say, gold, I mean, I just think that's just foolish.
Well, obviously, you got to fly into it here today, but no, it is not a safe haven. It is a very foolish statement to call a new cryptocurrency that has, what is it? It's up 14% today. Yeah.
And it did just break out of a high base on the intraday, just saying.
No, Beyond Meat's a safe haven. Did you know that?
Well, if you take what we just said and you look at old Beyond Meat here, this is crazy to me, guys. I'm gonna get your take on it. The market in the last 3 days, what's down? 5%, 6%, 5%, 5.5%, something like that.
Yeah.
Bitcoin's done nothing in the last 3 trading days.
Beyond Meat.
Not Bitcoin, but Beyond Meat. I mean, wow, Mark, you've been trading Beyond Meat quite a bit. What's your take on that?
Beyond Meat don't care about your trade war.
Beyond Meat does not care. All right.
Beyond so Meat, I got into a debate on Twitter, or at least I got yelled at on Twitter for saying something negative about Beyond Meat.
Oh God, the fanboys are out. They're just like they're the beginning of
and
Tesla
like,
in 2013.
You don't understand. The stock market takes a look at the future, and price right now is about the future. Beyond Meat 400.
Were you like, thanks? We understand what a PE ratio is, idiot.
No,
okay?
He was teaching me.
Yeah, he was teaching what a negative PE ratio was. That what he was talking about?
Beyond Meat, listen, it's like Tesla. Beyond Meat is like Tesla. You cannot.
It's their fanboys now.
True believers.
Like they taste the same, or
as in these stocks are the future. I don't care that they don't make money. Yep. I don't care that they increase shares. I don't care about anything, because did you know that vegans are good people?
That's a good argument.
Listen,
and they let you know it.
Listen, they are good people, but yes, do you not look at the future? That's so funny. I will tell you, I'm interested here in a short-term trade above 130, 183.50. Talk me out of it.
I would not go long equities into the moving averages in this trade war environment unless I had more stable. I think it's better to play things.
Didn't you just hear that that Beyond Meat doesn't care about your trade war?
I get it. Maybe a bull call spread or something like that.
Right. Well, obviously, it would have to be something in the
Listen, Beyond Meat, this is how crazy it is. Beyond Meat had a secondary offering of 3.25 million shares. So where companies are buying back, Beyond Meat's like, no.
We're issuing.
They're issuing more shares, and they issued them at $160. And price still is where it's at.
Wow.
They issued them at 160.
They issued them at 3.25 million.
So were these
at $160?
Accredited investors who already own shares, they were offering them?
Well, the company offered an additional $250,000, and then the rest of it were investors that I don't want to wait till the lockout period's over. I want my money.
I'll buy at 175.
These puts are too expensive. Can I just sell my shares? And they're like, sure. Hey, let's just issue some more shares because we're Beyond Meat, and it does not matter what we do.
They could always sell a 32 Delta at 160.
Yeah. And I had a tweet, and I should have made it. I'm like, listen. Well, it's a good thing Beyond Meat is issuing new shares, because when they lose money in the future, at least they'll lose lower amount per share on their EPS. Here's
my question. With the volatility where it's at, $2,000 for a naked put on Beyond Meat, $11.50 credit on a naked put. It's insane.
It is insane. Well, the option chain, though, does always grab my attention and fascinate me. I mean, I could spend an hour just looking at the option volatility pricing on those calls and puts and the ratios. It's one of the most interesting chains that I've seen since I've traded, and it's not just that they're high, but it's how they have attracted so much interest and volume from traders, not just the vegans, Mark. I think more interesting than what the company does is how the market is approaching it.
The next vegan company that IPOs, I am buying blind. I'm just buying.
Beyond Meat is like the exception to the rule.
I don't care.
All right.
I'd rather lose money than miss out on these cultists driving the stock up.
Make sure you tweet
about it. They love you on that one.
Along.
Hey, Matty, Monday we always do sectors.
Hold on. Oswaldo, when would you buy puts and how? That is a great question. Matt, you need to get into pro member of tackle trading, watch the step system, so you don't need to ask us. Okay.
And plus, last Tuesday's coaches show, when I came in to promote, last Tuesday's coaches show was on the protective put.
Yep.
Like right before, we did a whole coaches show, and if you think it's a coincidence that we did the protective put right before all of these big events, well, it kind of was, but it was appropriate timing.
Every Tuesday when we're sitting in the tackle meeting, we're always like, okay, what is the topic that we really need to talk about tonight? And if there is something important that we see happening, We usually pick a topic that's important and relevant for that technical economic environment. So yeah, I mean, historically it looks back, it's like, yeah, good timing, but there is some logic that goes into
There
that.
is some. I mean, I remember coming on promoting the show last Tuesday on the halftime report, and I was like, listen, volatility's low. I know it's crazy. Market's at all-time high. Why are we talking protective put? But volatility was really low last Tuesday.
That's when you buy puts.
And that's when you buy puts. It's when you, especially for portfolio protection.
Absolutely, 100%. You don't buy portfolio protection after the market screams down 6%. I can tell you that.
Yeah.
All right. First and foremost, let's quickly look at the sectors here, Tim. S&P 500. Let's look at the ES. Obviously, these are coming into today. Almost all of them would be downgraded further, ladies and gentlemen. So this is coming into this is the rankings from before the cash open today, and obviously the futures open on Sunday because we put out the tackle newsletter on Saturday. So all of these would be slightly more downgraded from where they are. S&P, we downgraded 20 points coming into the positive 35 territory. The crazy thing is I'm still looking for a little bit of some buying action here, Tim. Let's let it kind of settle down first though. Looking at the aggressive sectors here, basic materials downgraded to a neutral / slightly bullish rating at 40. That'd be downgraded even more as it clipped the 20-day, 50-day moving average and broke support at 57.30. You are starting to see a little slowing momentum on the intraday, but that's just an afternoon low in my opinion. You do have support at 56. Keep an eye on how basic materials handle support at 56. Looking at the energy sector, this has been constantly the lowest rated sector for us pretty much all year to date, and nothing changes that here today except one very simple reality. You are now sitting at a major support level of 58.76. Tested under it just a tad, increased in volume coming into the sell-off. Anytime I have a real big movement coming into a daily support level, I like to kind of switch it out to that weekly chart to see how important of a break that would be. If it broke 58.75, you really don't have support till you start getting into the 56 to 55 and at 55.50 level. Keep an eye on the energy space. You should have some bearish breakdowns this week in that space. Looking at the communication sector got a downgrade to positive 35. That would be just ripped up and burned away coming into today's price action. Gap down and run. No real support till we get into about 47.50. You do have 47 right here as well, where you have the 200-day moving average. Keep an eye on this. Communications is a falling knife at this point, and a lot of these stocks within the communication sector, they have a tremendous amount of exposure in that Chinese-U.S. trade war. So keep an eye on that space as well. That it's positive 35 on the scoreboard. That would be 50 at best for me right now. Looking at the next sector, industrial stocks have a lot of exposure to China as well. Look at this coming down into that 200-day moving average. Keep an eye on this. It did play a role here. It played a little bit of a role here as well. Will it play another role here? We don't know. The future will let us kind of see that. But let's keep an eye on it this week. Maybe we get a doji. Maybe we get some upward movements in price. And then you might want to go look for bullish stocks that are in this space that really kind of held their channels instead of came down into the 200-day moving average. So find stocks in this space that are strong, forming bullish retracements, high bases. You could get some opportunities as that 200-day moving average kind of catches and holds. Technology, another sector with tremendous exposure to China, got downgraded to the positive 35 level as well. Very similar to communications. That would be somewhere around the 45 level right now, but you're looking at it a little bit of a falling knife, sitting at a major support level. As you can see over here, support, resistance, support right here. So you're sitting at a major support level from a horizontal support level at $76. You break that, it's a stepping stone to 74 and then 72. So 76 needs to hold for if you're looking for bullish trades on technology stocks, in my opinion. Looking at consumer discretionary, retail, getting smoked. Don't see a support level until we start getting into 112.50. You also have the 200-day moving average, which played a massive role before we saw real good price appreciation here. It also played a role right here before we saw real good price appreciation. So in my estimation, let that falling knife come down into that 112.50 mark, somewhere around that 200-day moving average, and then we might be talking buying the dip, but only at that point, in my opinion. Financial, got a lot of neutrality, did get downgraded into the positive 35. That would be downgraded into straight up neutrality. Now you're looking at just massive ranges here, lots of different support and resistance. I don't see any type of opportunity here from a technical perspective. You do have the 200-day moving average at 2650. Underneath that, I think let me rephrase. Underneath the 2650 level, 200-day moving average, you certainly could capitulate even further underneath that level, but it's got to break that level first. Keep an eye on how that 200-day responds. It certainly doesn't have the same type of, analysis on financial that we saw on discretionary. So I'm not that excited over the 200-day moving average, but it certainly could play a role there. Looking at the next one, consumer staples here, this sector has been consistent, and yet it broke the 50-day moving average here as well. I do see a support level, fairly important support level on the staples sector at $58. If staples can really stabilize here, yes, pun intended, if it can stabilize here, start to reclaim a little bit of bullish momentum, you should have some bullish opportunities in this space. But again, all of this is on the precipice of that knife falling down, finding the floor so that we can start the buying action again. XLRE, we downgraded into the 40 territory. There's a lot of neutrality. I think it has a good rating here, good dividend payer stocks, but nothing to see here from a trade perspective unless we can break out a 38 by 38.50. Looking at the next sector, utilities here it was really kind of the only sector, Tim, that we did not downgrade coming into the weekend, and understandably so, as we just got a lot of neutrality between 61 and 59. Keep cash flowing on those dividends and covered calls in the utility space. Keep an eye on 59. If 59 breaks, well, 59 breaks, your bullish stock should be doing okay. So it's not going to be the end of the world. But if 59 does break, you could see some price appreciation down. Keep an eye on 61.40 on the top side. And then last and certainly not least, healthcare. Healthcare broke the 200-day moving average. There is no support until 87. Keep an eye on how 89 holds from an intraday.
Awesome job, Matt. Thanks for running down the sectors. I got to tell you, as I'm looking at those charts individually, one at a time, as we're going through the market, it just makes you lean more bearish, quite frankly. All these chart patterns are ugly. And I know that we're gapping down here, but the S&P 2853, and there's no real bottom here until 2800, Matt. Going into the end of the day, we got 2.5 hours here. I want to get Noah, Mark, Cody, everybody's last thought here. What would you want to see one way or the other, or anything? What are you watching here between now and the close? Matt, I'm going to start with you.
I'm watching two levels here on the S&P 500, and I don't expect a lot of it to happen in the next little bit, but I do expect to see some volatility coming into the last 30 minutes, last 60 minutes. I'm looking at this 2860 level on the S&P 500. If you break it down into that 15-minute chart, you can kind of see that show a little bit of retracement. If you break it down into the 5-minute chart, you can see the retracement form a little bit more. You see this retracement coming back in, downward movement in price. This to me is a short-term intraday bearish retracement. If confirmed, price should depreciate.
Yeah, Noah, what about you?
I'm going to be watching Twitter, specifically Trump's feed.
Just Trump's feed, just making sure that nothing happens.
Watching my charts, watching Twitter, just making sure nothing crazy happens. I'm leaning more bearishness. Typically with the day like today, I expect some follow through to the downside.
Mm-hmm.
But you never know what kind of ace they might have up, hidden up their sleeve, so to speak. So keep an eye on those charts, and if in doubt, batten down the hatches.
Mark,
this transcends technicals right now. When we've looked at the trade war in the past, you'll see days where it sells off, days where it rallies. I mean, Noah was joking, but he was being serious too. He's looking at Twitter. He's looking for the next salvo.
Mm-hmm.
The next salvo from China, the next salvo. Larry Kudlow coming out and saying, hey, market, I've said this 47 times before, and it's all been lies and propaganda, but I know you are dumber than even I give you credit for, and I'm going to say everything's going well. We're making some progress behind the scenes with China. I mean, the market has bought that every time. What I'm curious about is what happens the first time the market doesn't buy that.
Mm-hmm.
So eventually, whether today, tomorrow, the next day, China or the U.S. will come out and say or do something. How does the market respond to that? Now, and then you have to analyze, is this all smoke and mirrors? Is it important? of course, we'll be here on all of our live shows.
It's all
giving
smoke
our
and mirrors.
thoughts. So, but I mean, that's how this plays out, and it's maddening. I know it is maddening, but following Twitter, not
Twitter helps. I'm telling you right now.
Does Larry Kudlow have
helps.
a Twitter account? Does the Mooch?
No,
Steve
the best.
Mnuchin?
The best is when Twitter takes Kudlow's like his videos. The economy's doing good. We're killing on the economy, and then all of a sudden it puts some gangster rap music behind it, and it's just fantastic. I love Twitter. I love everything about Twitter. Last thing I'm looking at, and then Tim, you can promote whatever we're doing this week. Keep an eye on the dollar here. The dollar broke out last week, set a higher high for the first time, and you dinged right up there about 99. Obviously, of a lot of volatility to the downside here as on the dollar index specifically. But man, look at that nice little resistance level. It's hitting into that 20-day moving average. Obviously, we need to kind of slow down here on the dollar. You know, maybe even a couple days here. There's not a lot of economics this week, so I'm looking at the dollar here as a potential buying opportunity if we could get some slowing momentum as well.
Yeah, all of those charts, all those things matter to me as well. I think the volume on the S&P is one thing I'll be watching real close to see if we actually get some volume picking up intraday. I know we've had a spike the last week. Everything's
You're going to have a record volume, not a record, obviously, but you're going to have a record volume over the last 2 months here.
It's going to be high. Yeah. And we're going to keep breaking it down in our podcast, in our shows. I think the only thing to promote here today, guys, is our pro membership. We do so many things that tackle trading, our coaches show, our cash flow club, our mastermind groups, the lounges in the morning. If you want to be a trader, join a community, join a team of people that are there to help you throughout the process.
One thing, Tim?
Yeah.
We see this all the time, guys. We see it all the time in our own internal data. When volatility picks up to the downside, we see everybody show up at the coaches shows more, at the halftime report more, we get more downloads on the podcast. But guys, it's the people that show up every day and really do their job as a trader every day, and the people that watch those scouting reports and newsletters every weekend, that they prepare for these things, because we were prepared coming into the weekend this week.
Yeah.
Get prepared. It's like the old Boy Scouts. Be prepared. Show up.
Straight.
You can't show up. You can't show up after the hurricane.
Like, subscribe, share, get this message out there. We'll be back tomorrow with our halftime report. Outside of that, we are out here, guys.